Hey everybody, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. So I'm going to be answering a question that I've been getting a lot. And basically, do we feel like our investments are safe? Do we want to continue investing in stocks and funds because of what's going on with SVB? Do we feel like our retirement is at risk? And, there's been a lot of information in the media about FDIC and the banks and should you keep your money in the banks? And I could just tell you just straightforward, simply, no, we are not concerned. We're going to talk about that today. So I'm here on one of my favorite websites, smartasset.com, free website, give you a lot of good information on investing, retirement, taxes, even financial advisors. So if you want to talk to somebody, who is a financial advisor, you can even go to their website and filter out financial advisors that would be beneficial to you. This article really helped me to understand what I needed to understand without all of the extra froth, is what I call it. Because sometimes when you get overloaded and you have just information coming in from all over, and it's the same type of information that's really, regurgitated different ways, it can actually make you feel really like you'll have a lot of anxiety. And I actually had to turn the news off a couple of days ago because that's all I was hearing. And so I wanted just to come on, answer those questions really simply. And then I'm going to tell you why my husband and I are not concerned and give you a snippet of our early retirement plan towards the end of this video. So if you want to know about why do we do all this investing and our strategies, you're going to see our retirement plan later in this video. So subscribe, like, share, and let's get started. So this article we're going to walk through together because I really do believe the author's name is Rebecca Blake. She did an excellent job just giving you the facts without, all of the extra stuff that the media can often do, especially if you're new to this and you're trying to understand what's going on. So we're going to talk about the FDIC and the SIPC because if you are banking, for example, the FDIC is a term that you should know. But if you are investing, that's stocks, funds, retirement index funds, mutual funds, dividend investing, you should know about the SIPC. Okay. And so I'm going to zoom in a little bit here, but you should be able to see it. Basically, when you're saving money and when you are investing money, you want to make sure that your money is safe, right? You want to make sure that there's nothing wrong, that if you needed to access your money, you can access it whenever you want to access it. Now, in my previous video, I talked a little bit about SVB and what happened. You could check it out. I'll have it somewhere up on the screen. And there's tons of videos on YouTube about it. But in this video, I'm going to tell you the differences between the two and why we're not concerned about our stocks or investments. I'm honestly not concerned about it. If anything, I'm going to be trying to invest more. Okay. So the Federal Deposit Insurance Corporation, that's the FDIC. Okay. That is the organization that insures your deposits in banks. Okay. So if you have a bank account at Bank of America, Chase, Wells Fargo, PNC, things like that, your money is safe up to $250,000. Okay. So the FDIC basically is a federal agency that protects your deposits. Okay. It's like insurance. You get home insurance, car insurance, health insurance. It's always nice to have just in case something go wrong. You don't want anything to go wrong, but if something does go wrong, God forbid, you're so happy that you have it. And remember, the FDIC was formed in 1933 and over 5,000 banks are covered by it. Okay. So it's really, really expansive. Now, if you have a credit union, there's something called the NCUA, which is the National Credit Union Administration. It talks more about it in this article. I will link this article down below so that you can go ahead and read through it. But again, I just wanted to keep it simple and just tell you what the FDIC stood for and why it was in place. Now, you may be asking, okay, Shalise, what does the FDIC insures? Okay. So all of your checking accounts. So if you have a checking account at one of your bank, don't worry, that's fine, up to $250,000. What about a savings account? That's the same as well. Money markets, CDs, and any now accounts, which are a negotiable order of withdrawal. Most people don't have that. So you don't really have to worry about it. The FDIC have these things in place, this insurance in place, just in case the bank fails. things could happen. I mean, you really can't predict every single thing in life, right? And honestly, let's be honest, we don't want to, because we'll live in a state of panic and fear all the time. And that's not a good way to live. But that's why you have these insurers in place like the FDIC, because they're there just in case something happened. A bank fails, go out of business. There's some scandal, like, it's there to insure some of your money. Okay. One of the things that I love about the FDIC is that if a bank does, go up in smoke or shut down, that's when the FDIC insurance will kick right in. So you don't have to worry about that. And FDIC usually responds quickly. I would say about a week or so, where you'll have access to your money. So you don't have to worry about, well, will I not have my funds, for a month or a year? No, usually within about a week, the FDIC responds very, very, very fast. So you don't have to worry about that. Let's talk a little bit about the SIPC. Okay. So that's the Securities Investor Protection Corporation. That's all of us who are investing. If you're investing for your children, if your spouse invests, things like that, this is what we need to know. So the SIPC is like the FDIC for your bank. The SIPC is there. It's an insurance corporation for your investments. Think of it like that. So the SIPC is great because, again, if something happens with a broker, Fidelity, Robinhood, Webull, Vanguard, Charles Schwab, TD Ameritrade, this will kick in as well. So your stocks will be covered. Your bonds will be covered. If you have broker issued certificates of deposit, some brokers do have their own CDs, quote unquote, mutual funds and things like that. That will be covered as well. One thing you have to understand now, the FDIC will cover your deposits, like up to $250,000. Now, though the SIPC, their limit is $500,000. Let's say the broker goes out of business and you are under, right? You're underwater. Let's say the stock you're in, AMC, you're down $5,000. They will not cover that. Okay. We're talking about anything you have profit in. That is what's covered. If you are underwater in any position and let's say Fidelity goes out of business, they will not cover your losses. Okay. So just keep that in mind when it comes to investing, which is why if you are new, you should not be trading. You should not be shorting. You should not be doing options. If you are a beginner and you can't tell me the difference between an index fund and an ETF, you should really stick to just the beginner level. Why? Because it minimizes the risk that you put yourself, in not just losing your money, but if a broker, goes up into smoke like SVB, then you'll be covered at least, because 9 times out of 10, if you are in a good index fund or a good ETF or a good just individual stock, you won't be underwater so much. Okay. And you don't want to get a margin call either if you're a beginner and you're trading and all of that. And remember, this also applies if you have a credit union. So in this video, we were just talking about banks and brokers, but if you have a credit union, the same limits apply. And there's a link in this article to the National Credit Union Administration, or the NCUA. So again, go ahead to this article. Again, it just gives you what you need to know without all the extra panic and fluff and fear. And that way you can get some type of understanding. And again, I'm not concerned, if Fidelity goes up in smoke, Vanguard goes up in smoke, and all of these, like the big dogs, then we have a really, really big problem on our hands in terms of not just the economy, but the government and just the whole economic system in this country. And we really, really should be, at that point, okay, we can panic a little bit because something's really going on that's not good. But at the end of the day, I'm confident, was it a bailout? Who knows? But at the end of the day, we want to make sure that we, the normal people, can take advantage of this. We're going to continue to invest. I'm going to continue to have the videos out. My next video will be our portfolio update. You're going to see that we're down, but you're going to also see that we are continuing to buy. Okay. Amazon is not going anywhere. Apple, VTI, SCHD, VOO, Realty Income are not going anywhere. And I'm going to continue to invest. So I'm going to bring up our retirement plan to show you guys how we are doing. So this is our retirement plan. I've shared this on this channel several times. So if you are new to the channel, go back. I have playlists for this reason. Go back and watch some of the videos. But again, we do all this investing. And this is why one of the reasons why I'm not so concerned is because I'm sticking to our strategy throughout all of this mess. And we want to continue to invest because we want to retire early. Now, we would like to retire early so that we can focus our energy on like building up my husband's side business. I want to expand Mommy Trader. That takes time and energy. And we also have children. So again, this is why we're investing. This is why we're sacrificing. This is why we're sticking to our plan. So again, you can see all of this. Our retirement plan is up here, current age. I'm 38, so I have to update this, but about 5 years or so. And our retirement goals is about $90,000 a year or $7,500 a month. Now I will do this separately in a separate video because I want to do like an extensive FIRE update. If you don't know what FIRE means, it's financial independence, retire early. It's a big movement just in the finance world. So we are a part of that movement. We love it. And I can tell you that it gives you direction for your finances, for your money. Okay. This is our current financial state. So our current net worth is a little over 1.2 million. You can see all of our assets and liabilities. But like I said, I'm trying to wait for this quarter to like really close out at the end of March. And I will do like an extensive video on this. But just to show you, our eye is on the prize. We're not so worried about what's going on with the banks. We're concerned. We have our eye on it. But at the end of the day, we have several bank accounts. We have many broker accounts. And we're confident that, it's going to be okay. We're going to come out of this. But, again, our plan. We have our retirement motivation. So our why and where we draw inspiration, our retirement timeline. Like I said, I have to update this a bit because we're in 2023, but just some things we want to achieve by then. Okay. And then our plan for withdrawal, which is right here. Move my face. So yeah, that's why I'm not concerned. I'm not concerned. Like I said, the next video you're going to see is our portfolio update. Yes, our investments are down. You're going to see Robinhood. You're going to get a peek into interactive brokers and just our taxable accounts. And you're going to see like, yeah, we're down, but that's okay. That is okay. So leave me some comments down below, guys. Have you been feeling like pressured from watching all of the news and the media about the banks? Are you feeling nervous or scared or concerned? Let me know down below. And I'm hoping that this video provided you with some calmness. But make sure you subscribe, like, and share. Hit the bell notification button. Follow me over on Instagram. Make sure you follow my podcast. If you need any extra help, like private groups, one-on-ones, trackers, spreadsheets, check out the links below. You'll see my Patreon also there as well. So again, thank you guys so much. And until next time, I'll see you on the next one. Bye-bye for now.